Hey everybody, Boris Speaking for us. Welcome to our weekly technicals for the majors for September 17th, September 21, 2018 for Eurodollar, dollar yen, and pound dollar. The headline this week is really that headlines are driving trade. All of the funder risk in front of us is very minuscule. It's really going to be very much a political rather than economic event risk driver this week. And we'll examine those issues in just a minute. But before that, let's just take a look at where the levels are, because levels have moved a little bit since last week, especially in the yen and the pound. The euro is still staying within the 17 to 1500 range. We really failed essentially at the 1700 level, and now becomes a very, very big test, the second test of the 1500, which we're going to take a look at in just a second. The yen is on the cusp of the breakout, and in many ways, this I think in some ways is going to be a very, very interesting trade this week. But it's not quite ready yet, in my opinion. You can take the punt on the yen going long, but you could be running straight up dab into very, very key technical resistance. Although I will say the yen is acting much better than you would have thought it would have acted given the fundamentals. So that's going to be very much worth taking a look at in just a second as far as the charts go. And cable is acting actually much better. And I think cable is showing relative strength here, at least certainly technically, despite all of the overcast issue regarding Brexit. Now, looking on to the funda this week is very, very tepid. There's not much fundamental news of any importance, especially on the majors front. We do have the UK CPI, PPI data, but frankly, really, how strong is that going to be? I mean, even if it's bullish, it's not necessarily anything that's going to be an act on the part of BOE, because the BOE is essentially going to stay stationary as far as the time can see until the Brexit issue gets settled one way or the other. Now, maybe if we do get the Brexit issue settled, that will inform BOE thinking going forward. But for now, it'll just be a very, very mild, I think, non-event as far, even if surprised to the upside. Kathy is bullish cable, given the fact that we've had a rise in prices, but I think its impact will be minimal, given the fact that we still have much more fundamental news going on forward here. We do have UK retail sales. Another interesting data point here. Kathy is a little bit bearish because we had weaker BRC sales, so there could be it's kind of a mixed signal on the retail sales front. The most interesting funda report is actually going to be the PMI flash data. Now, PMI services data, PMI manufacturing data, these are all the flash PMIs in Europe are the absolute latest on the ground measurements of exactly how well the economy is doing at this point. So we've had stronger ZOO, but we had a weaker industrial production, factory orders. The more interesting thing to me is if the PMIs start to dip below this 55 level. The 50 is the boom bust level. 55 has been a comfortably expansionary level. We start to wobble back down below the 54s. That's where that headline risk really comes in. And let me talk to you a little bit about that. So there's really kind of three headline risks as we look into the majors. On a dollar side, the headline risk is the Chinese trade war issue, with Trump administration seemingly very, very gung-ho on enacting the $200 billion worth of tariffs. Still not clear if they're going to do it, if the cooler heads will prevail, but the point is that it's likely they're leaning that way. That could be negative dollar yen. Although dollar yen, sort of, the market kind of listened to it and shrugged off the issue. Either the market thinks it's not going to happen, or it thinks that even if it does, it will be less of an impact to the U.S. economy and even the Chinese economy than most people think. The second big headline issue is, of course, Brexit. And here, the back and flow around the Irish border is the critical issue. Until somebody blinks on that issue, really, the Brexit story is not going to get resolved. The third interesting headline is actually fundamental in nature. This is what drove euro down at the end of the week, and we could drive it down even further as we go forward into this week. There was apparently a lot of disagreement on the ECB Council about issuing a more dovish statement at last week's ECB presser that stressed the downside risks, because clearly the European economy, which is the most export-sensitive economy of all the major nations, is hobbled by all of this trade war talk all across the world. First of all, between US and Europe. Secondly, between US and China. All of this issues could be having some very serious negative issues on forward orders for European exporters. So in some ways, this data point, which doesn't come in all the way until the end of the week on Friday, could be the most interesting data point for Europe. If the market gets into its head that the European economy is really slowing, sort of a shorthand for this, if you think about this, is US grows at 3, Europe grows at 1. Now, we're not up there for the US side, and we're certainly not down there for the European side, but still, that's the uber bearish euro case. That massive discrepancy, 200 basis point discrepancy in growth, certainly drives euro to the downside, takes dollar up against it, and that is really the headline to watch for. Now, looking at the technicals, the euro clearly ended up negative on Friday. Lows of the day, not lows of the week. Failure to take out the 1750 level here. And if you look at it on a longer term basis, it essentially confirms a failure at lower highs, right? Failed here, failed here, failed here, failed here. Does not really bode well technically for us. However, we're coming into this massive 1550 support. And this support has held once. If it sort of holds again, that's a relatively bullish euro. If it doesn't, then we're really right back towards possibly retesting a double bottom. Maybe even if we make a higher low, it still is 200-300 points away from here to really truly test the spike lows of early August. Bottom line is, it feels like there was a sentiment change on Friday. It could have a continuation, especially if we get Funda data to back us up. But we don't really have the Funda reading until the end of the week, so you really don't know. The most interesting thing I think from the short side is if you're going to short, clearly the 1750 is your stop point. Now, if you have enough patience and you have enough firepower to withhold any rallies up to 1750, you may be able to survive this move. But that is really the proper stop against this particular move. The other way is to simply sort of get into the trade with a tight stop and just assume that it's either a momentum breakdown or you don't want to be in it, which probably is kind of the right trade to take at the beginning of the week. I wouldn't give myself a huge amount of room here. Either the negative sentiment builds against the euro, or we just sort of have a one-day wonder and we come right back up and you're going to get stopped out. It's just, if you're a positional trader, though, if you sort of have a longer-term negative view on the euro and really believe in growth discrepancies between Eurozone and the US, then establishing a position here at a relatively decent price with a stop at around 1750, maybe even 1800, not a bad idea, because the longer-term charts signaling that we could retrace right back down to, at very minimum, a test at a double bottom here. Cable, on the other hand, is doing much better. What was impressive about cable here, and do not dismiss this because that tends to be generally a pretty good signal, although not necessarily always an immediate signal. Here you can see this to the downside. When we test the much longer 500-day SMA, that tends to give you, as I said, not always immediately, some pretty good clue towards the directionality of where we're going, right? So here, beginning of July, we tested it to the downside, and we had, at least from here, what was that, 31 to around, we had about 500 points of directionality to the downside, which took, granted, a couple of weeks to develop. Similarly, we now move back up, recaptured the 5. Now, could we fail the 500? Yes, we can. So to me, I think if we get down to 2,900, you can pretty much consider it to be a relative failure of this, penetrating this move, and I would get out of the way. But up to that point, up to 2,900, we could consolidate here for a couple of days, 3 or 4 days, and ultimately, technically, this is signaling to us a move to the upside. So cable looks relative bid, euro looks relative sell. Dollar yen looks like middle of nowhere. Here's the thing with dollar yen that's fascinating. So pretty bad U.S. data. I mean, nothing great. Weak retail sales, weak CPI, but yet the price action in dollar yen has been quite good. It's really, really accelerated to the upside. Now, the key thing here is that the dollar yen price action, while accelerating to the upside, stalled very much at the point it failed at the beginning of August. And that's why it's very problematic to want to try to get long this pair at this point. I think you want to see it close at 1250 to really give you a dose of confidence that we're in a true breakout. If we get 1250, then you have to peel back and look at the much longer term formation, which is very, very bullish. Because look at the longer term formation. We have a series of higher lows. We have a clear rebuild here all the way from mid-March. And the 1250 puts us right on track to take out the near-term swing highs of 1319, basically puts us on track towards a move to the 114 and 115. That it becomes a much more stronger momentum move going forward. So we're almost there, on the cusp of breakout, but not quite. I'd love to see those numbers close up about 1250, because that would give us a much stronger technical picture of a much higher move in dollar yen on a much more positive basis. That's how the week shapes up. I wish you guys best of luck, best trading. Boris Schlossberg, over now.